We want to bring in Ryan Detrick. He's Carson Group Chief Market Economist. Ryan, it's great to see you here. So big banks kicked off earnings season last Friday. Here we are a week later. What do you make of the results that we've gotten so far and what that signals for what's ahead?
Yeah, thanks for having me back, guys. I mean, yes, the banks dropped, remember, for that last Friday, then came back. Overall, earnings have been kind of lackluster at best. Let's be honest, though. Most of the big boys do start, next week, so we get some of the real big names. But I want to dive in on something. You guys are talking about housing data. Yes, the housing data has just been, terrible, maybe is the best way to put it. But look at housing stocks. Housing stocks are up today. Housing stocks are leading, right? The market is a leading indicator. We're not saying if you're selling your house, buying a house, that might be messy. But the stock market is leading, and that's strength, and that's strength from consumer discretionary and housing. Those are things we didn't see last year, right? Let's be very clear. We didn't see that last year. So now we're seeing that. That is definitely something investors need to pay attention to.
That's something you bet would continue, though, Ryan?
Yeah, we would. We just released actually our 2023 outlook just this week. And one of our calls that you could say is more controversial, I guess, we don't see a recession this year. And I know, a lot of economists do, but we see some potential bottoming in the housing market. We see yields rolling over. We see huge spikes in people that are getting mortgages over the last week. The consumer, yes, it's not perfect, but the consumer, in our opinion, is still fairly strong. They still have that cushion of over $1 trillion of excess savings. And we think we can avoid a recession. And when you look what the stock market's doing here with the strength from all these different, look at tech, right? Tech did terrible last year. Now we're seeing leadership from there. It's a broad-based rally. To us, again, that's a different sign than we were seeing 12 months ago. And that's a positive thing.
Ryan, we really are coming off the worst year that we've seen for the market since 2008. I know you've done some historical data in terms of performance, how stocks tend to bounce back from bad years. What does that look like in terms of the performance that maybe we could expect here?
Yeah, good news is it's very rare, guys, to have two down years in a row, 73, 74, and then 3 years of the tech bubble. Those are also recessions. Again, we don't see a recession. If we have one, it's probably pretty minor with the consumer in pretty good shape going into it, not our base case. But bottom line is, stocks tend to bounce back. When you actually look at the worst 4 drops ever, guys, back to World War II, the following year was up every time, up like 27% on average. When you're just down for the year, you're up about 15% on average that next year, higher 80% of the time. So these are all just percentages of numbers, yes. But the key concept, again, it wasn't just bad for stocks, right? It was historically bad for bonds. A 60-40 portfolio, you had a really rough year. Now we've seen bonds actually coming back nicely and stocks, and we think it's going to be more of a back to normal. We think stocks, guys, can gain between 12 and 15% this year, with bonds giving you about 4 to 5%, kind of right about where the yields are. But we think, it's going to be a much better year than people give it credit for.
Digging your optimism, man. Tech layoffs, are those going to continue, and will they spread beyond the sector?
Yeah, we think they very well, great question. We think they very well could continue. If you look at overall tech layoffs, it's still such a small part of the overall economy. And other parts of the economy are still growing. So that's where it's so unique. We all know tech had that huge run in 2020, 21, where they hired. Now they're cutting some of the excess fat, I guess you could say. Don't like to see it, right? But at the same time, we don't think it's going to spread to the rest of the economy. I mean, look at what some of the, who was it? United Airlines said, right? I mean, people are still flying. People are still going out. They're still eating nice restaurants. It's just different areas that are slowing down, and clearly tech is. But that's kind of the economy. We still think it's going to grow this year.
Ryan, you mentioned the outperformance that we are certainly seeing in tech. When you take a look at today's market moves, what do you think is going to lead us higher in terms of the growth versus the value debate?
Yeah, we're sticking with value. I know growth has had a good run all of a sudden, guys. Value outperformed growth by about 21% last year. The last time it did something like that was in 2000. Here's what matters. The next 6 years, value continued to outperform. Just because you had one big year of outperformance, that doesn't mean it has to end. And we like I talked about, the cyclical value areas. We like small caps. We like industrials, your financials. Materials are starting to do better with some of those base metals. So if the economy avoids a recession, we think those are the areas you want to be in. We're neutral. Market weight is what I should say, technology in general. But we like value and cyclical value and small caps here for 2023.
All right, I want to see how truly optimistic you are. Cincinnati Bengals, 5.5-point underdog against the Bills. Can they win this week? Can they win it all?
Yeah, I would not want to bet against Joe Burrow. I mean, it's awesome, the Bills and the story, and DeMar's doing a lot better. But I'm a Bengals fan. I have to say, Houday. And betting against Joe Burrow is something historically hadn't done very well. So I like our chances this Sunday, I guess, at 3 o'clock Eastern. We're very excited.
It's a tough matchup, man, in Buffalo. The sentimental favorite, Josh Allen. We'll talk off air about a little wager, all right? Ryan Detrick, have a good weekend. Good to see you, man.